All right, let's just jump right in because what's going on with gold and silver right now? Wow. It is one of the most confusing, I'd even say dangerous, and totally misread situations I've seen in a long, long time. If you're holding any precious metals, you absolutely have to understand what's on the table for next week.
I mean, this is the question that's just breaking everyone's brain, isn't it? Why on earth are so-called safe havens getting hammered during a war? It's supposed to be the complete opposite. A major geopolitical crisis hits, and everyone runs to gold. It's like rule number one in finance. And yet, that is not at all what we've been seeing.
So yeah, gold had this little initial pop when the conflict picked off, but then it just fell apart. We're talking a drop of over 20% from its peak. And to put that into perspective for you, that's the worst single month for gold since October 2008. Yeah, that October 2008, right in the middle of the global financial crisis. It makes no sense, right? It's the exact opposite of what should have happened.
And silver? Oh man, that's a whole other level of crazy. It's down a staggering 44% from its all-time high. And get this, it hit a new low for the year while a war was raging. I mean, you can see why this has just scrambled the brains of pretty much everyone watching. So, what is really going on here? Okay, so here's the big reveal. The reason this is all so backwards is because the war didn't create the kind of environment that gold bugs were hoping for. Not at all. In fact, it did the exact opposite. It created something we can call a stagflation trap. So just think of it like a chain reaction, a set of dominoes falling one after the other. First, the war messes with a critical oil route, right? That sends oil prices through the roof. Suddenly, you've got real sticky inflation showing up everywhere, from the gas pump to your grocery bill. And that completely ties the Fed's hands. They have no choice but to keep interest rates high. So now you can get a safe 4.2% return on a government bond. Why would you hold gold or silver, which pays you nothing? That opportunity cost just became massive. And that right there is why the metals got crushed.
So that brings us to right now, this very moment. And honestly, the market is sitting on a razor's edge. It's teetering between two completely opposite outcomes. The tension is so thick you could cut it with a knife.
So look, you've got two completely different paths ahead. Path number one, we get a ceasefire. Oil prices calm down, inflation fears take a backseat, and the Fed finally has room to maybe signal a rate cut. In that world, gold could absolutely rip higher, maybe even towards $5,000. But then there's path number two. The ceasefire fails, the conflict gets worse, that whole stagflation trap we talked about, it gets even deeper. The Fed is stuck, and gold, well, gold could see a serious crash, maybe below 4,100. There's really no in-between here. It's a binary outcome. But hold on. There's another story happening here, one that you won't see just by looking at the price chart. And this might sound completely backwards, but this brutal sell-off, it could actually be a super bullish signal. Why? Because it's all about who is selling and, more importantly, who is buying.
Yeah, the analyst Arthur Parrish just nailed it with this quote. He says the money bailing on gold and silver right now isn't the long-term true believer money. Nope, it's the short-term hot money. The funds and traders just chasing a trend. They're getting scared and they're getting shaken out of their positions. And that is creating a massive shift in who actually holds the physical metal.
A great way to think about it is like this. You've got the momentum tourists, right? They showed up for the party, but now that things are getting a little dicey, they're running for the exits. But who's left? They're real players, the structural buyers. And they aren't just staying. They're calmly buying up every single ounce that the tourists are panic selling.
So who are these structural buyers exactly? Well, for starters, you've got central banks around the world. A new survey just showed that a whopping 95% of them plan to buy more gold. Then you've got massive industrial demand. Think about it. Every solar panel, every EV, every new AI data center, they all need physical silver to work. That demand isn't going away, no matter the price. They have to buy. It's not optional.
So what you really have here is a tale of two completely different markets playing out at the same time. First, you've got the paper story. This is the story you see in the futures market, in ETFs. And that story is all about fear. You see money pouring out of ETFs, you see low trading volume. It's all reflecting that short-term panic.
But then you have the physical story. And this story is the polar opposite. It's a story of a massive supply shortage. For silver, this is the 6th year in a row, and non-stop buying from industries and central banks. So you have these two stories, paper and physical, telling you two completely different things. That disconnect can't last forever. Something's got to give.
So the big question is, which story wins out? How do you know which way this thing is going to break? Well, you've got to watch the triggers, the key signals that are going to tip the balance one way or the other, and they'll tell you what's coming before the price makes its big move.
Okay, so keep your eyes on these 4 things. First, JOLTS job openings and the U.S. unemployment numbers. Basically, if these look weak, it gives the Fed an excuse to cut rates. Second, where Brent crude oil is headed. If oil stays below $100, that gives the Fed a lot more breathing room on inflation. And finally, the CME FedWatch tool. This thing basically takes all that data and spits out the real-time odds of a rate cut. These are your leading indicators. They move before the price of gold and silver does.
So all this craziness we're seeing, the volatility, the fear, the big shakeout, don't mistake that for the end of the story. It's not.
It's the setup. All the weak hands have been flushed out. The real structural buyers are now in the driver's seat, and the whole market is coiled like a spring, just waiting for one of those catalysts to hit. The chance to get your position set before the next huge move, well, it's happening right now. If you're watching this space, comment metals below.